I'll take you anywhere. Just tell me I'll be there. We don't need a plan, I like it unprepared. Whatever comes our way, we'll stay there for the day.
Greetings, everyone. Thanks for joining us. This is our first episode of our podcast, Listed and Loaded, and I'm pretty excited. I truly hope you guys enjoy this. It is my goal to provide you access to knowledgeable professionals in the real estate world that can give you valuable information. We may not cover everything, but we're going to cover something. And that's better than nothing. So without further delay, this is Matt McDaniel with the McDaniel Mortgage Group.
Can you hear me?
No, I can't hear you, bud.
All right. The speaker.
Not hearing anything. Turn up the volume.
I have not changed any setting.
There. I got it.
You got it now?
Yeah, I can hear you, bud.
That's you. You made that mistake.
That was me, man. I'll take full responsibility. How's your day going, bud?
Good, man. Just got some contracts that are just like popping up all of a sudden that I didn't expect, which we love those.
Yeah, that's
one. Close one. We're going to close it in 7 business days. This guy set on this deal, set on this loan for, it's supposed to close February 27th. And he didn't have the appraisal order, didn't do anything with it. I got it last Friday. I got it. Legally, you can't close in within 10 days. 10 days is the max. We closed it. We're going to close it Monday.
Nice. Congratulations. Yeah, that's cool, man.
Yeah. ER, I'm going to rename my shop ER Mortgage.
ER Mortgage?
ER Mortgage Shop. Yeah.
What is that?
Emergency room.
Oh shit. Okay.
Yeah. Right.
I got a serious question. All right. Are you married? You look like you got a ring on. Yeah.
To a man.
To God?
To a man.
Okay. All right.
Thanks, dude. You're like, okay, that makes sense now.
Nice. Hey, I don't judge, man. It's 2025.
No, I have proof.
You have proof? Living proof?
Yeah, here she is. Oh, this is funny. This is a shot of it, right? Of us at the Versace mansion in the Miami when we were on the company trip. We were going down South Beach. My wife's like, "Oh, South Beach. Oh, there. Oh my God." She was like freaked out. There's a Versace mansion. I was like,
that's the guy that got murdered, right?
Yeah.
Oh, dude, I saw that.
They made it into a tourist attraction. It's crazy.
Oh, that's crazy, man. Yeah, I saw the documentary or whatever they did, a docuseries or some kind of reenactment.
Yeah, I saw that too. That was pretty.
They did pretty good actor.
Yeah, I tell you what, she had a little champagne in her. She's like, "This is just sad." They made a tourist attraction, of this guy's death, which is kind of weird, but posing. I said, if we're gonna act like complete and utter douchebags, snobs, this is the time to do it. So let's pop on the sunglasses and have us take some pictures.
I can't see it. It's blurred out because of the background. Oh yeah, okay, that's awesome. That's awesome.
A woman. I'm married to a woman. Yes.
Well, that's unfortunate. I'm sorry.
Yeah, that needs to be right. No shit. Sometimes I wish I was married to a man.
Yeah, me too. Mine's mad at me right now because like I tried to say my son's diaper. No, she like
you act like it's like a dog. Mine's mad.
Oh well, I'm sorry.
you know what I mean.
No, she's mad at me because my son did not want to have his diaper changed, and I'm trying to change his diaper, and he just has complete meltdown. He's 2.5 or almost 3 years old,
man.
actually.
We don't have any kids.
They're a blessing, and then they're also, it's
Most people say like, "Good for you," and then some people are like, "Oh my God, are you okay?" I'm like, "Yeah."
no, it goes both ways. There's good times and there's bad times, definitely.
I just
I
want
mean, it's
someone
like
to
what
take care of me when I'm older, so
I got you, bud. I'll take care of you, man.
I have to
Shit, I
get
got
rich.
you.
Have your kid take care of me.
Yeah, shit. You know what? We can get a mansion. You can be on the second floor or the first floor, and I'll be on the other floor. And he can take care of both of us. That way he doesn't have to travel very far.
Thank you.
Yeah.
Dude,
All
I tell
right.
you what, yeah, I'm feeling that 47 creep up on me really fast. It's that nine more days.
Oh shit.
9 more
Happy early
days,
birthday, man. Good for you.
I guess.
I'm 46
I'm
too.
not, I'm regretting them now.
I'll be 47 in October, man. I hurt every day.
My
I,
freaking shoulder, my neck hurts constantly. My freaking shoulders always hurting. Yeah, whatever. It's all
it's
good.
like a sports injury or what?
Yeah, I've got a pinched nerve, and it gets
Oh,
really bad. It gives me headaches, frankly, like chronic headaches. And
okay.
I broke it. I broke it, my neck in high school, and
You
my dad
broke your
was.
neck?
I fractured it.
Damn, dude.
I didn't even wear a collar, and so when they did the MRI back then, they're like, "You got a narrow spinal cord." They told me that then, and now I've got a pinched nerve. Back in 2015, I was like holding on to some, like it was a golf stretching machine. I was literally monkeying around, holding all my weight like that. And I felt this, and it was at my stepdad's place. I go out to the golfing range. I draw back the club. I'm like, "Oh, that's a lot harder than I thought. Something's wrong." Right. Next day, I'm doing my normal workouts. I got like 5 or 6 push-ups in. I'm like, "What the hell's going on?" And then I could barely get 6 push-ups. Right. I tried to do dumbbell curls. Couldn't get 15-pound weights up.
Oh shit.
Yeah,
Man.
awful.
Yeah, that's
So
crazy.
I know I haven't had to have surgery. I re-aggravated it in a skiing accident last February. I looked at it again, and I'm fine. I'm better, but it's I got to be careful when I can't ski like really hard, like double blacks, like I used to be able to. I shouldn't do it. I mean, I have, but I don't need to be.
No,
But every day,
I started snowboarding. I've been snowboarding twice. And I started that in my like early 40s and I almost killed myself both trips. So that's the end of my
snowboarding's tough to do. You like they say that it like the first 3 days were absolute hell, and like you can get injured badly on a snowboard.
I almost broke my left arm doing it because I was going fast and I wasn't trying to go fast. I was trying to slow down. So I brought my hand out. I hit a snowbank and it bent backwards and I heard a snap in the elbow. And yeah, there was a lot of pain. I was sure I broke my arm, but I never got it looked at. It's fine, but I never did. But
Yeah,
it works okay now.
you'll probably feel it later in life, right? Like everything else, it seems like.
Probably.
Did you play football?
No, I was in the military for 6 years, and that took a toll on me. And
Right.
I never did. I did never did like sports or anything. I played hacky sack in high school. Does that count? Extreme hacky sack.
Yeah.
I was one of those dorks.
You're a hippie.
Yeah. Oh man. All right, bud. So thank you everybody for joining me today. I have Matt McDaniel with me. Matt, can you say hello?
What's up, guys? Pleasure to be here. Thank you, Brandon, for having me.
Yes, sir. Can you introduce yourself a little bit? Give us a little bit of background knowledge.
Yeah, I've been in the mortgage business for 20 plus years. I've been got a vast knowledge of VA loans. I did VA loans primarily for about 11 years, and then I went out and did some self-sourcing referral type business in 2018. It's gone well. A little bit slower the last few years, just like for everybody else. But I pride myself in my creativity helping out our clients and realtors get people into houses that normally wouldn't be in houses if they didn't speak with a guy like me.
Awesome, brother. Awesome. So how do you compare this year so far to last year, the market?
I've seen an immediate jump. I think I may have mentioned this to you, but the January that we had was better than May, June, July, and August, not combined, but per month. So it's coming together pretty well. Definitely production's up. I'm seeing a lot more buyers out there, simply because sellers they're saying, okay, we're going to take some off this price. We're going to give some seller contributions when they weren't previously. They're not stubborn like they were the previous 2 years. So good. It's going to get better.
Yeah. So you think now is a good time to buy, or at least this?
An excellent time to buy. You're going to get, we've seen about 4% depreciation in properties over the last year. So that's going to be, you're going to get more for your money. You're going to be able to get those seller contributions we talked about. Seller come down on the price, whatever you want. And you're going to have your way with the seller more than you have in the last 13 years. This is going to be the most balanced market that we've seen in 13 years. It already is compared to this time last year. It's crazy.
Yeah, I remember having a conversation with you like last week or was it the week before at the award ceremony? You said 70% of real estate agents didn't make one sell.
70% closed 0 deals.
That's crazy. That's crazy. There are a lot of real estate agents in the Houston area. I think it's 48,000, something like that. And for 70% of people is that like nationwide or is that statewide?
Nationwide.
Oh, wow. Wow.
34,000 of them didn't close the deal, right? Math is right there, I bet. Yeah. We said 45,000?
Well, about 48,000. Yeah.
That's 34,000. Yeah.
Oh, okay. So what are the current interest rates and how do they affect the monthly payments on various loans?
Well, current interest rates as a whole are about 6.6%. Government loans are going to be lower than conventional loans, and government loans are around 6.25%, give or take. Conventional loans a bit higher. We've got some products that can give you about a 1% lower interest rate, depending on where you're purchasing, than the current market rates, which is awesome. But government loans, just to describe exactly what those are FHA, VA, and USDA loans. Right. Different loan types for different types of credit profiles and buyers, right, and their needs. So
there are programs or are ways to get lower interest rates than just what's posted on the internet. Like say you said it's around 6. What'd you say it was? I'm sorry.
6.6% is the average.
So you can actually get a lower interest rate than that just based off your own personal profile, like your credit score and where you're at.
You can do a 2-1 buy down, which is 2% lower the first year. First of all, not an adjustable rate. 2% lower the first year, which would be like if it was 6.25, the end rate was 4.25 would be the first year. Second year would be 5.25, and then 6.25% if you do not refinance. It would remain that way throughout the term of the loan, correct? Or you can buy down points, as people probably know, discount points to buy a lower rate, right? Get down into the 5s, just depending on their credit profile. Get down into the high 5s, 5.75. I lost one today at 5.875. It was 3.5 points to do that. However, we did.
Okay.
They wanted the lowest rate possible. We got it done.
So let's say that I'm going out and I'm looking at houses and I haven't talked to a buyer, or I'm sorry, a mortgage broker yet. And I make my first contact. And what's the difference between pre-qualification and pre-approval? I know there's a distinction between it, but a lot of people think that they're one and the same.
Pre-qualification, as defined in the state of Texas, would be you've stated your income, told me how much money you make, told me how much assets you have. We review credit, and then you're pre-qualified. Pre-approved means that we have reviewed all the documents that we requested, pay stubs, bank statements, W-2s, if you're self-employed, tax returns, and basically underwritten that file. We issue a pre-approval letter.
Okay. So the pre-qualification is more of just a conversation between the two of you, and the pre-approvals paperwork's been submitted. You've actually looked into their credit report, their finances, and
Right.
then you give you
Right.
okay.
Correct. However, it doesn't usually change a whole lot. It can, but if you are self-employed, it can change more dramatically than if you're a W-2 wage earner or you have a retirement income. That's correct.
Okay. And there's a difference, well, not a difference, but you do the pre-approval on the front end of the process of getting a home, and then near the back end, near closing time, you'll do a reassessment of the buyer's eligibility.
You're saying another credit pool?
Not necessarily a credit pull, but just a reassessment of where they're at and if they're able to actually go through with the closing.
There's a certainty that I have that's 100% if I issue a pre-approval letter.
Okay.
Okay. With 20 years in the business, I basically underwrite the file myself. However, when it's underwritten, it goes through the underwriter, right? And they condition the file out for, they need insurance. We need an appraisal, right? So and then they approve the file with conditions. We need to prove that the earnest money cleared, this, that, and the other. So that, yes, it is a process. However, the bulk majority of that process should be cleared out already with the pre-approval, right? So you're not done once you get a pre-approval. That's what you're asking, right?
Yeah.
But in some cases where you've got I'm saying, okay, we got an 80% chance of approval, 90% chance. I'd tell you otherwise if we didn't have a chance, but we'd go through underwriting to get they call it a manual underwrite, right? And we'd get that approved beforehand before I said, hey, we're good to go shopping. Then I'd issue the pre-approval then in those more marginal type cases.
Okay. So so somebody gets pre-approved, they're a first-time home buyer. What are some of the most common mistakes that you find first-time home buyers make?
Well, the stating the obvious, which is not obvious to everyone, because I've seen people quit their jobs right in the middle of the process because it's verified that you have employment, in our case, within 10 days of closing. Okay. And there's also a credit refresh that's done before closing, which is a soft credit check to see if you've got any new debts. If any new debts pop up, we have to show what those are. And if it pushes your debt to income ratio above a threshold that can't be approved, then you can't be in the house. We cannot get you in the house. Crazy stuff like that has happened. Right.
So people have actually quit their jobs, or they've made big purchases like cars or maybe even furniture, and then
Maybe
it just
they
totally
got
kills the
married
deal.
all of a sudden, right? And they're doing a government loan in Texas. If you get married during the process, then we have to pull that spouse's liabilities into the file, and then it can disrupt things, especially if they're not employed and if their credit's not good. It doesn't mean they're on the note, but they have to show their liabilities, and it can be a game changer. The first one thing that I can tell everybody is, I'm your friend and tell me everything. I'm an open book. I'm here to make this look pretty for you, make it look pretty for the underwriter. So I want you to be comfortable with your loan officer when you're speaking with them. The more information you divulge, frankly, the better.
What type of loans are best for first-time home buyers, and how do they differ in terms of eligibility and benefits?
Most first-time home buyers don't have the funds to do a large down payment. Some do, but a lot of the times, a second home buyer may have money from the sale of their previous house. So therefore, they can do 20% down when a first-time home buyer just hasn't had the time to collect those funds, right? So an FHA loan's a great one. If their credit's not perfect, they don't have a lot of depth of credit history. That's a 3.5% down payment. And sometimes they can fit into the conventional mode, which is a little more sticky on your debt to income ratio, your expenses, and your new mortgage payment divided by your gross monthly income. And we also have down payment assistance programs available as well, which cover your down payment and on some of them, and some can cover your closing costs as well. What comes with the down payment assistance program? Nothing is free, I'll tell you. So the interest rates are higher on those types of loans.
But it does help people actually make the down payment and get them in the house.
You can go down to a 600 credit score in the house, and we have another program that goes to a 620 credit score minimum.
What do you guys look for other than just the credit score for qualifications?
Primary, okay, would be your income and your debt level. That's when I refer to the debt to income ratio. That's your debt to income ratio. Expenses, minimum expenses. Just think, because you have student loans. A lot of people say, "Oh, I've got a lot of student loans." Well, that doesn't disqualify you from buying a house, okay? But it's your expenses divided by your income, and the expenses including your new mortgage payment, potential new mortgage payment, divided by your gross monthly income. All right. So that, and then another huge factor is your assets that you have. That can help you get qualified the higher amounts with your assets. It helps, especially with the down payment assistance program that I mentioned. It looks at a factor of your credit history, not just your credit score. Your credit score is not everything, but your credit history. It's very important not to have 30-day plus lates within the last year when you look at those types of programs. And if you've got some assets to go along with it, you can say yes versus no.
Okay. How long does the process take for getting pre-approved? And then, I don't know, well, you guys don't really, well, I guess you do, for the closing of from when you first get approved to the actual closing. What's the general time length?
It varies. We're closing 1 in 10 business days on Monday, right?
That's insane. That's quick.
That's a super quick closing, right? That's legally the fastest that you can close a loan. I'm sorry, not 10 total days, seven business days. In most cases, 30 days is the closing period, right? Again, we close them all the time sooner than that, but yeah. So the one that we're closing on Monday, yeah, that one was. I took the application that day, got it into processing immediately. So we can do it that quickly. Is that ideal? Absolutely not. But the other lender dropped the ball, so we took it from there. And we're going to get him in his house.
What's the longest you've seen?
Actually,
in Houston?
The longest?
Mm-hmm.
Well, I get it. I mean, it can take, what if there's a date that's set on the contract, 3 months can be a long period of time. Various loan types may take longer than that.
So when it comes to closing costs, what should buyers be prepared for?
I'll give you a percentage range, and that would be 3 to 4% range. If they're wanting to buy down discount points, it could go higher than that. The typical, just say 4% would be a good number. If you're buying something on the low end, yeah, maybe up to 5%. The low end, when I say 200,000 and down, but when it gets a little higher, 3%. If you're looking at say 600,000.
What's one piece of advice that we have not covered yet, or we have not covered today? What's one piece of advice you would give people that are looking to buy a house?
Talk to me first, so you know your buying power, so you're not going to get excited about finding a house with your realtor and all of a sudden, oh man, you cannot get qualified. So talk to me first. I'm not the exciting part. I feel like I should be, because when you get that state that says you're good to go shopping for a home, I'd be excited. Then you're not worried about the not fun part, if you in your mind of talking to a lender and then possibly saying no to you. So you rip the Band-Aid off. There's nothing wrong with figuring out where you are. Having your credit pulled is something out there that is really it's an untruth, really, because worst it's going to hurt you is 1 or 2 points on your credit. If that's the difference when you get into a house and by the way, it's not, okay, then you need to work on your credit. That's why you need to talk to me.
Yeah. So it's better to know where you're at before you even go looking, because you don't want to get your heart set on something that you don't qualify for, or vice versa. You may think that you don't qualify for it, and it turns out that you're able to get, yeah, you do.
Yeah, you do. And people have that doubt in their mind. Oh, I've only got a 640 score. Well, I can get you in the house more than likely if you say you've got a 640 score. Now, by the way, there's 53 different algorithms for credit scores out there, like auto pools, credit cards, and then there's mortgage pools. So there's different algorithms, and usually it's about 30 to 40 points lower on a mortgage pool. So keep that in mind. Don't be surprised. A lot of people with higher credit scores, there's not a variance. If you've got a score that's in the 780s, it's probably a 780 or 760, maybe an 800 even, the mortgage pool. But as a whole, though, on the, when you look in the mid 600s, I'd say it's usually going to be lower.
Well, thank you so much, Matt, for joining us. Can you let people know how to get a hold of you if they're looking to get into a home and they need financial assistance?
I can. They can call me, and that number is 214-435-1988. They can also go online to my online loan questionnaire, which is basically an application at appwithmatt.com. That is appwithmatt.com.
Awesome. Thank you so much again, Matt. It was a pleasure having you. See? Aren't you guys glad you stuck around for the whole thing? You got to learn something about Matt you didn't know before, and you gained some knowledge in the real estate world. Good for you. And you're welcome.
I'll take you anywhere. Just tell me I'll be there. We don't need a plan. I like it unprepared. Whatever comes our way, we'll stay there for the day. So dream away.